Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. This is the 11th video of the series, The Final Missing Piece. In this series, I have tracked the past 10 years share price movement of top 10 companies of every prominent sector of Indian share market. And based on that, I have tried to identify some historical trends which could be helpful for all investors who are interested in those sectors. In today's video, I'll share my analysis of the capital goods non-electrical equipment sector. Please read the entire disclaimer carefully and subscribe to the channel if you haven't already, and comment, share, like and press the bell notification icon. The capital goods non-electrical equipment sector in India encompasses companies that manufacture machinery and equipment used in industrial processes, excluding electrical machinery. The sector is integral to industrial development, providing essential tools for various industries. The sector's performance is closely linked to overall economic environment and industrial activity. The sector has strong long-term growth potential, supported by government policies, industrial expansion, and technological innovation. The challenges that the sector is facing are slowdown in demand, volatility in industrial activity, supply chain disruptions, fluctuating input costs, infrastructure and policy delays, technological advancements, and competition and export market uncertainty. So, in order to see the historical trend, I'll present 5 graphs in front of you. First will be the yearly returns graph. The second will be the yearly swing graph, in which we'll see the number of positive and negative returns month in the last 10 years. Third will be the monthly returns graph. Fourth will be the mean monthly returns graph. And the fifth will be the monthly swing graph, in which we'll see the number of positive and negative returns here. The top 10 companies of this sector comprises of 3 large cap and 7 mid cap companies. So before we move ahead, this video is only for educational purpose. There is no buy, hold or sell recommendation at all. Please do not skip any portion of this video and watch it in full. You're going to learn a lot, which will help you to take investment decisions on your own in future. This is the first graph, yearly returns graph. This is the line graph, which has 2 lines. One is this blue line, which shows the yearly returns in percentage, and the other one is this orange line, which shows the cumulative yearly returns in percentage. So 2015 was an average year for this sector with 7.61% return. But 2016 was not a good year for the sector, and the sector gave negative returns of minus 2.83%. But 2017 was a very good year for the sector, and the sector gave a positive returns of 75.39%. 2018 and 2019 again were not good years for this sector, and both of these years gave negative returns, with 2018 gave minus 10.95, whereas 2019 gave minus 13.80% of returns. The situation improved in 2020, and the sector gave returns of 25.62%. 2021 was outstanding year, once in a lifetime year for the sector, I would say, and the sector gave returns of 127.79%. 2022 was again a strong sector for this, again a strong year for the sector with the returns of 34.64%. 2023 was a very good year, very good year for this sector, I would say, with the net returns of 94.60%. 2024 was also a strong year for this sector with the returns of 53.28%. So if you see last 5 years from here to here, these 5 years, so last 5 years were very good for this sector, and it is visible in the cumulative graph as well. So it was going like this, and since 2020 it went like this. So by the end of 2024, the cumulative returns over last 10 years were 15.1517.89%. That means 16x. astonishing results by this sector. Let's move on to the next graph, which is the yearly swing graph. So in this graph, this green bar shows the number of months with negative returns, and this red bar shows the number of months with negative returns. So the green shows positive returns, number of months with positive returns, and red shows number of months with negative returns. 2015, 6 positive, 6 negative. 2016, again 6 positive, 6 negative. 2017 seems to be a very good year for this month, with 10 months returned positive, gave positive returns. 2018, again 6 positive, 6 negative. 2019 was not a good month for the sector, with only 4 positive months and 8 negative months. The situation turned on its head in 2020 with 8 positive and 4 negative. Improved further in 2021 with 10 positive months and 2 negative months. 2022 again was a strong year for this sector with 8 positive months and 4 negative months. And 2023 is an outstanding year for the sector, and all the 12 months gave positive returns. So this is, I don't know, no one can ask more than this. All the 12 months gave positive returns in 2023 in this sector. 2024 again was a very strong year for this sector, and 8 out of 12 months gave positive returns. So let's put both of these graphs together, and let's try to identify some pattern or get some takeaways. So first is that the cumulative returns of the last 10 years is 1517.89%. That is 1517.89%. That is 16x. So anyone who has invested in the sector at the start of 2015 and has not withdrawn the money, by the end of 2024, their money would have been multiplied by 16 times. So outstanding returns in the last 10 years in this sector. CAGR, 32.10% CAGR. One of the best CAGRs, very, very good CAGR in the last 10 years. But one thing that needs to be kept in mind is that out of the last 10 years, 3 years gave net negative yearly returns. So if you clearly see, last 5 years are especially good for this sector. What else? The best year for this sector was undoubtedly 2021, which gave return of 127.79%. Whereas our worst year was 2019, and in 2019 this sector gave negative returns of 13.80%. Let's move on to the third graph, which is the monthly returns graph. So this graph is a combination of 12 smaller graphs, one graph for each month. So January, February, March, April, and so on. These bars in each of these graphs, so the green bars shows the positive returns, whereas the red bar shows the negative returns in that year or that month. So if we see in January, January seems to be a good month for this sector, as 8 times in last 10 years this sector gave positive returns in the month of January. February seems average, 5 positive, 5 negative. March again seems to be a better month for the sector with 7 positive and 3 negative. April even better with 8 positive and only 2 negative. So 2015 and 2019 were the only 2 negative years for this month of April. May average 5 positive, 5 negative. June better with 7 positive and only 3 negative. July even better with 8 positive and only 2 negative. August average 5 positive, 5 negative. September just above average with 6 positive, 4 negative. October average 5 positive and 5 negative. November, a very good month for the sector with only 2 negatives, 2016 and 2019. So basically 8 positive years and only 2 negative years. And December above average with 6 positive. Let's move on to the next graph, which is the mean monthly returns graph. So in this graph, we can see that February historically has given the negative returns. September almost flattish, a smaller negative returns, and March as well, although positive, but only 0.68% historical in the last 10 years. But there are very good months as well for this sector. If you see June 5.31, November 5.29, April 4.9, July 3.96. So there are several months which gave very good returns historically in the sector. Okay, let's move on to the next graph, which is the monthly swing graph. So January gave positive 8 times in the last 10 years, February 5, March 7, April 8, May 5, June 7, July 8 times out of 10 gave positive returns. So seems to be a good month for this sector. August only 5, September 6 positive in last 10 years, October only 5, November again seems to be a very good month for the sector with 8 times positive returns, and December 6 times positive returns. So let's put the last two graphs together and see what we can deduce from them. So here are the last two graphs in a single slide. So let's see the cheaper months. So clearly February and September are the cheaper months for this sector. February 5 positive, 5 negative, and September, although 6 positive, 4 negative, but still. Okay, what about the costlier months? The costlier months are the April 4.9, here it is, June 5.31, July 3.96, and November with 5.29. So I have presented graphs in front of you. You can drive your own conclusions by seeing these graphs. That is all from me in this video. Thanks for watching it. Please subscribe to the channel, like and comment. I'll be back soon with another video. Goodbye for now.